gentlemen, I probably do one speaking engagement a week, which means that I honestly do not know what I'm going to say from one week to the next. But Malcolm has made it very easy for me today because he's asked me to keep my address as short as possible and only for a few minutes. I'm delighted to be here. And let me say that I know Malcolm probably for around 3 years now. Malcolm is an integral part of the fintech ecosystem in Gibraltar, and indeed Malcolm is proud to call Gibraltar his home. It's unlikely that we will have another Malcolm, but certainly we need more people like Malcolm in Gibraltar. We need more people with the expertise and energy to infuse Gibraltar with that growth enthusiasm that we are all trying to put together in order to take Gibraltar to the next level. So Malcolm, thank you very much for the support that you give to this jurisdiction. I had the privilege yesterday of also meeting James, who's one of the speakers here today. James is an influencer. He used that terminology with me yesterday, and I'm 56 years old, so I'm not sure that I've heard that name or that word on many occasions in the past. He is an influencer. He has 40,000 followers on X, formerly called Twitter. And I had, he is a financial analyst. And I sat down with James yesterday for about an hour and 20 minutes for an interview. And I had dinner with him as well. And I can tell you, there was such a buzz of energy from this young man that I really didn't want to leave dinner last night. And I had to be dragged away from the table. And I'm delighted to be here now because I think you will thoroughly enjoy his presentation in a short while. I'm also very happy that James qualifies for my Connect Hub program because he's only 27 years old. He happens to be the same age as my son. In terms of making any announcements this week or of something that I haven't previously announced, let me make two in particular, if I can, please. First of all, we as a government are hoping to publish a bill in the foreseeable future, within the next month or so, that replicates as far as reasonably possible the UK bill that is before Westminster, but it's before Parliament in the UK, which is called the Property and Digital Assets Bill. That bill has the unanimous support of Parliament, or at least he expects to have the unanimous support of Parliament, and is being expedited through the parliamentary process in the UK. Although it is only expected to make it to the statute books by the end of this year. What the legislation does is it recognizes digital assets as a form of property. There might be those among you that would say, well, Gibraltar is a well-established crypto and DLT jurisdiction. Why does it need that? That's a fair comment, except that the laws of Gibraltar, funnily enough, do not have that statutory provision. So I'm very pleased to announce that we will shortly rectify that. That is certainly the advice that we have received from the industry, including but not exclusively from Tug, who's here today, and it's somebody that I rely on quite frequently in terms of my engagement with the industry. Those of you that were here at my Financial Services or Investment Summit last month will know that I think it was a huge success. I think it was the first time in 31 years that the government of Gibraltar, the industry and the regulator came together in one venue that happened to be Sunborn in order to be able to have an open discussion, a frank discussion about where do we take financial services in Gibraltar to the next level. How do we do that? We took with us immediate actionable recommendations, and I am very pleased to inform the audience here today that I have started my engagement with the Gibraltar regulator, the Gibraltar Financial Services Commission, so that the regulator can take on board those actionable recommendations that are important in terms of their regulatory approach to the industry. We have a one-in-a-lifetime opportunity, and that opportunity is here and now, to really give DLT and crypto a big push and to take Gibraltar to the next level in the global regulatory landscape, and to really put Gibraltar amongst the leading jurisdictions in this space. And I can tell you that that is exactly the policy priority of my ministry, and indeed, therefore, the policy priority of the government of Gibraltar. Without further ado, Denise, thank you very much indeed.
Now, I've got something to read from because there's a lot of things I want to say, but it's going to be very quick, I promise you. First of all, thank you, Nigel, for your kind words and for setting the stage for tonight. Your support for innovation and financial services in Gibraltar is invaluable, and I'm really grateful for you to coming here and opening the proceedings today. For those of you who don't know me, my name is Malcolm Pallé. I'm co-founder and chairman of Coinsilium Group. It's a London-listed advisor, venture builder and investor in the Web3 blockchain space. That's pretty much the global heading we have. So I also serve as a director of Forza, which is the digital asset strategy company that is Gibraltar registered and wholly owned by Coinsilium Group, and that's what we'll be officially talking to you about tonight. I want to make a mention to Eddie Travia, who in absence is our CEO, my co-founder. He's based in Singapore. He's a friend of Gibraltar, and he's been here for a while, but he hasn't been here for a little while. In fact, he hasn't even been here since COVID, and so we have to get him back here. So I'm sure he misses the place as well, and we'd be really good to see him here. But he's been foundational with myself in driving Coinsilium forward. So in 2018, Coinsilium relocated to Gibraltar, following the introduction of the jurisdiction of the forward-thinking DLT, Distributed Ledger Technology Regulatory Framework. After 6 years here, I'm pleased to say that as of today, I hold one of these cards, which is a testament, I think. So it's a red card. Currently, I can fly across the border with just a passport and maybe a stamp, depending where I'm going. I don't know what the benefits are. I've not been told, but at least I can say I've got it now, and I picked it up today, which I was really, really happy about. So after 6 years, with a red ID, with my permanent residence, I can say that Gibraltar has truly become and is now my home. As Coinsilium's journey continues here, and continues to evolve alongside the industry, we see ourselves as Coinsilium as part of Gibraltar's digital asset community, and we are committed to contributing towards growth as in this leading hub. As Coinsilium's journey, I've just read that line. So Gibraltar welcomed us during a critical time for our company, when digital assets were in their nascent stage and regulatory clarity was lacking everywhere. So we value, or so should I say, lacking elsewhere, because we came here and there was a lot of understanding and clarity here. So we value this symbiotic relationship, and we're dedicated to helping Gibraltar further its role as a centre for innovation and opportunity. So why are we here tonight? Well, tonight I want to introduce Forza to you, but I have to pronounce it in the Italian way, which is Forza, which means power, strength, and it's something that's used a lot in football terminology, but especially supporting the Italian team. But it meant a lot, the name sort of resonated with us, and I want to share a little bit about our vision. So a key part of that vision includes understanding broader shifts in the digital asset adoption. To help frame this, we will hear soon from James Van Straten, who's advisor to Coinsilium and to Forza, and is also a senior Bitcoin analyst at CoinDesk, and he will share some insights into Bitcoin's growing role as a treasury asset. Before diving into our agenda, I just want to make some formal introductions to the people here tonight. So James is going to be speaking and delivering his keynote speech. We also have Clément Hequet. Did I pronounce that right?
Yeah, thank you.
Perfect. So Clément is co-founder of a company called Automato. It's a project, a non-custodial Web3 automation protocol, and it's a seed-stage project that's backed by Coinsilium. And Clement is also an advisor to Forza, and he will discuss Automate's role within Forza's strategy. And finally, we have Anthony Provosoli, partner at Hassan's, who is advising Forza on regulatory compliance and will join us on the panel tonight as well. So following James's keynote, we'll have a short Q&A for him, and then the panel, which I will be moderating afterwards, will proceed, and then you'll be invited to stay for refreshments and networking. So what is Forza's vision? So Forza is here to capitalize on emerging opportunities around Bitcoin and digital asset adoption. We are witnessing a paradigm shift where Bitcoin is increasingly recognized not only as a technological breakthrough, but also as a treasury asset. James will show some eye-opening data on the pace of public company treasury adoption, particularly in the US. The trend is accelerating, with institutional and even sovereign adoption growing. Within our industry bubble, it's easy for us to forget how wide the gap is between our understanding of Bitcoin and the general public's understanding. A major barrier isn't adoption itself, it's the lack of mainstream education. As an example, I had a recent conversation with one of my neighbors, and this underscores this. Despite following financial markets, he believed that he had missed the boat with Bitcoin, and he was offered some at 5,000 and he didn't want to buy it. Because the reason why he wouldn't buy it now was because he didn't realize it was divisible. He thought he had to still buy one Bitcoin. He couldn't buy a fraction of a Bitcoin. When I told him that, there was a revelation, because he thought his 5,000, he's missed the boat. He'd have to pay 85 or 82 now, or whatever it is. So that was a seminal moment, and it was a reminder of how basic concepts are often unknown by many. Another common misconception is the failure to differentiate between Bitcoin and other cryptocurrencies. Many still lump Bitcoin together with the wider cryptocurrency market, unaware of its unique attributes. This lack of understanding presents us with a challenge and an opportunity. We believe that bridging the gap is crucial for adoption, but it also offers a significant commercial opportunity, one that Forza is poised to address. So Forza is also going to have a digital asset strategy, in the sense that it will hold cryptocurrencies that have been gained through various investments that Coinsilium has, and it's in Coinsilium's crypto reserve. This Forza will be the entity that will be dedicated to holding and maximizing returns from its cryptocurrencies. So Bitcoin will be the cornerstone of Forza's long-term treasury strategy. However, to optimize performance and generate yield, Forza will also hold stablecoins. These assets provide liquidity and will support yield generation mechanisms, including automation technology. The goal is to balance Bitcoin's long-term value and yield opportunities with other assets while managing risk. Our strategy will steadily increase Bitcoin's holding within an actively managed treasury framework. So why Gibraltar? Well, Gibraltar has spent years building its reputation for excellence in the digital asset space. Its DLT framework has attracted key players, positioning the jurisdiction as a trusted innovation hub. However, beyond regulation, there is a clear need for structured education and knowledge sharing as the industry moves forward towards broader adoption. Just as the internet required foundational learning in its early days, the same applies to digital assets today. Gibraltar, with its credibility and experience, is well positioned not only to lead in regulation, but also to serve as a centre for learning and thought leadership. Forza aims to contribute towards this broader mission. Okay. So for the road ahead, we have to have an unwavering belief in Bitcoin's long-term potential. The rise of Bitcoin as a treasury asset, particularly with momentum building in the US and the potential acceleration under the second Trump administration, confirms that we are on the right path. James will expand on these macro trends in his presentation, so I won't preempt it too much. But corporate and government reserves in Bitcoin are growing, reinforcing confidence in our strategy. Before I hand over, I'd like to take a moment to introduce Clément, who, as the co-founder of Automato, we have been hugely impressed by his exceptional team and the initiatives he's taken, not just on the technical innovation, but also on their commercial insight and the real-world impact of their Web3 automation model. We're genuinely excited about the value they're bringing to Forza's treasury strategy. So with that, I'll hand over to Clément, who outline Automato's importance and role within Forza.
Hi everyone, thanks Malcolm, thanks everyone for being here today. So just in a second I'm going to explain what Automato is going to do with Forza, but before I'm going to explain what Automato actually does in general. So as Malcolm said, Automato is an automation protocol. So we enable our users to automate their crypto assets to make them more productive, basically. So you might ask, but why would I use automations to make my asset more productive? And the answer is fairly easy. I don't know if you're quite familiar with crypto today, but the crypto market is insanely inefficient. If you react quickly, you can catch those inefficiencies, and extract money out of that. That's why big firms automate. But the thing is, automating costs a lot of money. Those big firms can pay technical teams to secure the crypto, secure the private keys, connect to all the crypto protocols and automate things. So, and those use cases, just to give some examples, are optimizing the yield you're generating of the assets, using delta, not all trust strategies, I won't enter into this one, but also optimizing the security of your assets, optimizing trading, I won't enter into this one neither. So basically what the concept of Automato is, we have internally the team that builds this infrastructure that enable anyone to do those automations without having to hire again the technical team, the second private key, etc., etc. You just go on the Automato website, in just a few clicks, you can set up the automation, and that's it. You have the exact same power as the big firms that are automating. So now, what is the use case with Forza? As I said, Automato, one of the use cases of Automato is making the assets even more productive. Today, when you have crypto assets, you can generate yields on top of it. That's one of the biggest use cases of what we know as DeFi, decentralized finance. So today in DeFi, you have roughly $100 billion that is locked in crypto protocols. And most of those dollars are actually not efficient at all. And so let's take actually an example. Let's say you have stablecoins and you want to make them productive. You want to generate yield out of that. The most known options today are lending your stablecoins. So you're going to go on protocol. So just to give some names, if you're familiar with crypto, you have Aave, Morpho, Compound, a lot of protocols like that. And you can just deposit your stablecoins on those protocols and earn yield. Because some people will borrow the stablecoins and will pay you some yield. The thing is, those yields varies a lot. Maybe today you're going to deposit on Aave because Aave is paying, let's say, 10% on your stablecoin. But tomorrow, Morpho is going to pay 15% because someone is going to borrow. Because just to explain, the rates varies a lot because it depends on market liquidity. In crypto, everything goes really, really fast and the liquidity moves a lot. So the rates moves a lot. What we propose at Automato is every 10 minutes, we analyze the rates of all the crypto protocols. This is the major one with more than 1 billion value locked on the protocol. And we just check actively the yields of all those protocols. And if the yield, let's say, is 10% on one platform and 12% on another one, we're going to put all the assets on the one that is generated 12%. If tomorrow, or let's say a few hours later, the first one is now generating 15%, we're going to take the capital and move it instantly on the other protocol. So that at every, let's say, any point in time, you can be sure your asset is going to be as productive as possible. So that's the first point. Then, when you're generating yield with your crypto assets, one of the big things to take into account is the security. Obviously, the assets are put at risk because you generate yield. That's just how it works. So the thing is, some risk can actually be quite easily avoided. So again, I'm not going to enter into all the possible risk of those money markets and lending protocols, but the only thing you need to know is Automato is actively monitoring all the transactions incoming into all those protocols. That's open finance. That's what is cool about crypto. And if we detect either what we call a bad debt, which is basically if there is a bank run in the protocol, we won't be able to pull out your money anymore. So we can, when we detect those, let's say, malicious transactions, the second after, we can be sure we're going to pull out all your funds, and you will be the first one to exit, let's say, the markets, and you will get basically all of your capital. That's just, let's say, the first strategy we're going to propose to Forza. And yeah, that's mostly it. Thanks, KC.
Thank you, Clement. You'll have time to ask Clement some specific questions later, as you will with James, as we will be. I just really wanted to sort of wrap that up with what Clement mentioned. So his Automato is going to be incorporated within Forza's strategy. We're going to hold Bitcoin, and we're also going to use stable coins with the help of Automato technology to maximize yield. It's a very experimental thing we're doing in the initial stages, so we're not going to go all in with both feet. We're going to see how it goes, but we are very optimistic on the trials that they've run so far that they can help us actually make this really, really work. So it'll differentiate us from a lot of the other Bitcoin strategy propositions that are out there. So we'll see. It's an exciting time for us. So this is just the beginning for Forza. They've got some really exciting developments ahead. We've got new partnerships we hope to announce soon. Growing interest is building, and we have interest literally globally. We believe we're in the right place at the right time and as early movers in a rapidly evolving space. Now, returning to James, who's going to talk to you in a minute, whom I've had the pleasure of knowing for a few years now. I'd love to say I discovered him, but that would be giving myself a little bit too much credit. It's truly an honor to have him here tonight. James has become one of the most respected and insightful Bitcoin analysts in the industry, and we're thrilled to welcome him to Gibraltar. So join me in giving him a warm Gibraltar welcome. James, over to you.
Oh no, I've got this.
I knew that.
Is this too loud? Is this okay? Hi everyone, it's a pleasure to be here. Thank you, Nigel and Denise, for your hospitality over the last 2 days. It's been amazing. Coming from London and just seeing mass homelessness, it's lovely not to see that here. So it's really refreshing. So I'm just going to talk to you. So I'm just going to talk to you about Bitcoin as a treasury asset, its adoption, where we are in the cycle, and how it fits into the macroeconomic environment. I only want to be around 10 to 15 minutes, so we'll go through the slides relatively quickly. So on this chart, we have total global asset values, which account to around 900 trillion, or roughly $1 quadrillion worth of assets globally. And in today's world, a very uncertain world where you have gold going through $3,000 an ounce, global bond yields rising to multi-decade highs, a lot of uncertainty with investors. People are questioning the 60-40 portfolio in terms of, is this still a thing? Should we keep investing in it? So just to show a comparison of Bitcoin, which was a $2 trillion asset at its all-time high, is now about 1.7. And it puts into perspective how small it is compared to all these other assets. Bitcoin, for me, has the best fundamental properties as a store of value asset. And when I got into Bitcoin in 2017, for me, it made sense for it to be a digital gold narrative. So gold hitting all-time highs, and it's around a $20 trillion asset. So for me, there's around a 10x opportunity there. But because of Bitcoin's fundamental fixed supply, and it's a better store of value than these other assets here, you then just think about, okay, what happens if investors start to go, okay, we're going to take 1%, 3% of all these assets and put them into a fixed supply asset as tight, and Bitcoin trades on the margin. So you can see how much potential there is for Bitcoin. So this is just to understand the Bitcoin returns in USD and on a CAGR basis. So Bitcoin obliterates gold in the S&P 500 to foundation assets known globally. And then I think the interesting one, just to look at the S&P 500, where it's just the index of the top 500 US listed companies, and it returns on average around 10 to 15% a year. But the issue becomes when you look at the money creation or the money supply that grows year on year, and it's actually around 13%. So on a nominal basis, great, you're getting a 15% return. But if you actually look at it in real terms, you're actually only generating 1, 2, 3% a year. Gold is actually now starting to outperform the S&P 500 over the last 5, 10 years. And that really shows where we are in this monetary experiment that is fiat. So to understand the Bitcoin ownership distribution, who holds it? So we have governments that hold around over 500,000 Bitcoin, ETFs, other businesses, and then you get to some really interesting numbers for me, which is the lost Bitcoin by estimation. So again, we have a fixed supply of 21 million, and roughly 4 million Bitcoin have been lost by losing your private keys, losing your C phrase, and we can expect the trend to continue and that number to get bigger, meaning there's less supply out there for the market. And to be mined, meaning there's only just over 1 million Bitcoin to be mined into the future. The last Bitcoin gets mined in around 2140. So we're looking at a smaller and smaller supply as time goes on. So this chart for me really encapsulates the fixed supply of Bitcoin. So at the moment, 450 Bitcoin get mined per day, with an inflation rate around 0.5, 0.4%. Gold has an inflation rate of around 1.5%. So Bitcoin is the only asset on the planet where, irrespective of demand, supply cannot increase. So if there's more, real estate can increase in value, therefore there'll be more demand to create more real estate. Same with gold, same with bonds. Bitcoin is the only asset, irrespective of the price, they can't create any more supply. So my experience at CoinDesk and my Swiss hedge fund, I did on-chain analysis and to understand where Bitcoin was in cycles. So every 4 years there's a halving, meaning that Bitcoin's supply gets cut in half. So this is just two charts to show every cycle how Bitcoin performs after its halving. So the last halving was in April, and that's the black line where we are. So as the asset matures, you would expect diminishing returns, which is what we are expecting, but we do see this huge amount of growth the year after. And then you can also compare it from the cycle low. So the cycle low shows it from November 2022 during the FTX collapse. And again, it's forming a similar pattern to the previous cycles, again at a diminishing return. So far, everything has been expected. So I think this chart really resonates to what's going on currently. So again, this chart shows short-term holders and long-term holders. So when you buy a stock, you can't know who's buying and who's selling, but with the Bitcoin UTXO model and its addresses, we can then start to make inferences who holds and how long for. So the red line is short-term holders, and Glassnode define them as anyone or addresses that have held Bitcoin for less than 155 days. So these are speculators mainly. So when the price starts to run up, you can see that the red line starts to get really aggressive, the bid gets aggressive, and when we see those price peaks, that's when the top usually comes in, the market can't bid anymore, and then we start to see the price decline. once the price declines, the short-term holders that believe that the price will run up in the short term doesn't, it drops, and then they start to panic sell, and then you get these forced liquidations, and a lot of leverage is built up in the system, so you can get massive drawdowns very quickly. It's the same over and over again, and the best thing about this is human psychology, which gets repeated over and over every cycle. So again, where we are, we've seen that the red line spikes. Why? Because we've had the November election with President Trump, who's pro-crypto, so everyone thought, all right, it's going to go to 250,000. Doesn't go to 250,000, so then we start to see a pullback, and we see the same psychology again. The inverse is the long-term holders who have held for 155 days, and they come in, take and buy the depressed Bitcoin at those prices. The inverse to the short-term holders, and then they hold it, distribute it into bull market strength. The volatility of Bitcoin is compressing as the asset matures. So this is the price drawdown from all-time highs. Holding this asset is psychologically very painful. So I've now held, I started in 2017, so I've held through 2 80% drawdowns, and I can tell you for a fact this is not good for your mental health. But yeah, as you can see, the drawdowns do get smaller each cycle, not by much, but you can see by 2012 it was around 90%, and then it's around 5% increments. So we can kind of project that maybe the next drawdown from the all-time high will be around 70%. So we can infer maybe where an all-time high top could be. And then to show it in more of a cycle analysis, that each color is separated into each cycle. And you can see these huge bull market correction drawdowns. The question is, are we in a bull market? And we're currently in a 30% drawdown, which will be the black line right at the end of the chart. But you can see with the black drawdowns compared to the other cycles that the drawdowns are quite small, quite shallow. And this is like the institutional bidding that is going on. The investors becoming more mature. The institutions are starting to come, and they can hold the asset, where retail are more prone to selling when there's more volatility. So that's a chart that we expect to continue to compress as the asset matures. There's many innovations with Bitcoin, and one of the innovations with Bitcoin was its proof of work mechanism. So where fiat, you can create money at the click of a button. So in COVID, what do central banks globally do? They created 40% of the money supply. Inflation runs wild. Shock. But with gold and its proof of work, in order to mine, Bitcoin is exactly the same. It's proof of work, and it manages to connect the digital world with the physical world. And the orange line is the hash rate, which is essentially the computational energy in order to mine Bitcoin. Each block gets mined on average around every 10 minutes. And the hash rate is at an all-time high. So that's telling me that the higher the hash rate is, the more secure the network is. And only a few entities or few companies or countries can actually mine Bitcoin now, because it's so hard to mine at a profitable level. What that chart tells me is now sovereign nations are starting to mine Bitcoin, because they can mine Bitcoin at a rate where they don't need to be profitable. So obviously you have all these public mining companies that need to maintain profitability. They have shareholders, so they have to abide by profitability and revenue, where sovereign nations can run deficits or losses. So this is an extremely bullish chart, and I expect the hash rate trend to continue to increase. Just before this chart in 2021, in summer of 2021, China declared a ban on China declared a ban on mining Bitcoin, and the hash rate dropped 50%. This was actually one of the times I did worry, because you're like, okay, this is dropped 50%, what happens? But you can't ban yourself from Bitcoin. It's an open source network, so all that happened was the miners left China, or they went underground and moved to the US, they moved to Kazakhstan, they moved all over the world, actually making the network even stronger. So ETFs, this was one of the biggest stories of the year. They launched in January of 2024 in the US. We have had iterations of ETF to ETNs, which is a regulated equity-based instrument which trades like a stock on an exchange. Where we're very crypto native and tech savvy, most people aren't. So the ETF actually allows mainstream adoption really, really easily. And it's the ease of access that unlocks all this capital. So you could buy Bitcoin before the ETFs. And as a UK retailer, I can't buy an ETF and I can't even buy any US ETFs. So the ETFs unlocked all this capital that wanted to buy Bitcoin, that weren't allowed to buy Bitcoin. Now they can buy Bitcoin. So Bitcoin is still very hard to get access to, but only a handful of countries have form of an exchange traded product as an exchange traded fund or an exchange traded note. So we're only looking at about 15 to 20 countries at most. You can see it's the main countries that you would expect, and the US as the leading capital markets of the world, they only launched last year. So in 14, 15 months, the US have accumulated over 1 million Bitcoin. This was the most successful ETF launch of all time. It's blown away all expectations on any analyst on Wall Street. So it's a kind of this is to compare the Bitcoin ETFs, which BlackRock launched their ETF, their IBIT, which hit $50 billion in AUM. Quicker than any other ETF. So you've got the all spot Bitcoin ETFs in the turquoise, and then you compare it to Triple Q ETF, which is the Nasdaq 100 ETF, JEPI, the JP Morgan Equity ETF, Gold, the GLD ETF, and it's blown every other ETF that's ever been created out of the water. So for me, as I said earlier, Bitcoin is digital gold, has very similar properties to gold. And when when GLD launched, which is the gold ETF, which launched back in 2004, we had a 7-year run up in gold, and it was primarily due to the ETF inflows. But there's 2 quotes I saw from a Financial Times article, and it's very similar to Bitcoin. So it says that, again, no investment product listed on a US exchange is backed by a commodity because pension funds are largely prohibited from taking a direct investment in a commodity. So you couldn't buy it, pave the way for an ETF, gold, and then we're seeing the same with Bitcoin. And then again, hedge funds just before were taking a big futures position in gold, and the same happened in Bitcoin. So on the left is the IBIT, the BlackRock ETF's top holdings. A lot of them are asset managers and hedge funds. I don't know if it's on the chart, but there are a couple of pension funds in the US that have now got an allocation to IBIT. Largely, you can see there are calls and puts. So largely they are engaging in the basis trade. But there are a few funds now that are actually having net long positions in these ETFs. So the bottom right chart shows inflows and outflows of the ETFs. So the green is the inflows, reds are the outflows. And again, these ETFs largely are retail. So when the price drops, they'll sell. And when the price runs, they'll buy. So in this 30% drawdown that we've had, you can see the red outflows. And this is part of hedge funds unwinding their basis trade position, but it's also retail capitulation. So for us, we can see, all right, this is a near-term bottom. We may consolidate at these levels, and we would expect to go higher. So the basis trade is taking a long position in the ETF, shorting the futures market and collecting a premium. So when the basis trade was really prevalent, you could get a yield of up to about 12 to 15%. Now the yield on it is about 3, 4, 5%. So you can get the same yield in US Treasury, so it's not worth the risk. But the CME, which is the regulated exchange, the traditional finance regulated exchange where you can engage in the basis trade and take a futures position, is in the purple. And that became the #1 futures exchange, replacing Binance, which is primarily a retail crypto native exchange. The CME engages in cash, where Binance engages in crypto margin. So this will see volatility start to compress, which is a good thing. But you also want to see the institutions and the TradFi come into the space, so it legitimizes the asset further. However great the ETFs are, they're a small fraction of the market. So the ETF trade volume is in blue. It's only a couple of billion. Spot is around 5 to 10 billion, but the futures market, the trade volume can fluctuate between 60 to 100 billion. Ethereum is the second biggest cryptocurrency. Fundamentally extremely different to Bitcoin. I won't get into the details, but it is not a store of value, in my opinion. It has been very successful with its ETF product, but nowhere near as successful as Bitcoin. And the market now is starting to understand the difference between Bitcoin and Ethereum, between number one and number two. And on the right-hand side, Bitcoin and Ethereum have the largest market cap spread, meaning Bitcoin and Ethereum are really starting to decorrelate with one another, when Ethereum would just be known as higher beta to Bitcoin. Ethereum had really underperformed this cycle. And then the volatility continues to trend downwards. So from a risk appetite perspective, people that can't hold assets with large amounts of vol, this is a really good thing to see as the asset continues to mature. The last section is just on public company adoption. So there are around 170 entities holding Bitcoin. Around 85 of them are public companies. And then Bitcoin within the treasury asset side of it, I think 600 or 700,000 are held with public companies like MicroStrategy. So for me, as a UK retail investor, I couldn't get access to an ETF or any other Bitcoin exposure other than spot. So my pension or my SIP was looking for a home to have some Bitcoin exposure. So Michael Saylor of MicroStrategy at the time in August 2020 started his journey into Bitcoin. Since then, the stock is up 2,000%. So I get frequent emails from my pension provider, Harvey Lansdowne, saying I'm too concentrated in an asset and not diversified enough. So they've outperformed every single equity on the market, and he's used multiple methods in terms of raising capital. So he was sitting there in COVID, he saw inflation rise. His company was a zombie company, which meaning no one really knew about them, generating small amounts of profit. So he had to do something bold and different in order to try and get market awareness. He bought Bitcoin, put from the cash on hand that he had on the balance sheet, and it started off as a very defensive play. Anyone that's been following him, you can see how much more aggressive and how much more offensive he has got. And the results have really speak for themselves. He does multiple capital raises, such as ATM share sales, so selling shares into the market when the equity trades at a premium. He offers convertible notes, and he's doing these new equity preferred stocks as well. So his trading volume on the stock is it's only an $80 billion market cap. But when you're looking at the Magnificent Seven, that are $2-3 trillion companies, he's rivaling their trading volume. He's making MicroStrategy the most volatile company on the stock on the planet. So this is just a chart to show MicroStrategy against the Magnificent Seven's trade volume, and it's the red line. So he's competing with the Magnificent Seven in terms of trade volume, which is just an incredible feat. Again, these are just numbers to show MicroStrategy against the Magnificent Seven and other indices. The bottom chart shows its convertible debt. So I get a lot of questions about the liquidation risks or how over leveraged is he. And the actual honest answer, he's actually under leveraged. He actually needs to become more leveraged up in order to get more volatile. He has around $8 billion worth of convertible notes outstanding. So the market value at the moment is around 10 billion. Out of these 6 convertible notes, 4 of them are in the money. And the most interesting numbers are the coupon rate. So it's a 0.4% coupon rate. So he's effectively getting free money from the market and going off and buying as much Bitcoin as he can, with a maturity rate of around 5 years. So what's he trying to do? He's trying to increase Bitcoin per share on the balance sheet. So as an investor, where you don't want to be diluted, I'm actually cheering on to being diluted, meaning you take the assumed diluted shares outstanding of a company and then you divide it by the amount of Bitcoin they hold on the balance sheet. And as long as that continues to increase, it will get harder and harder as time goes on. But that means I'm actually getting more Bitcoin per share as an investor. And he refers to it as accretive dilution. So where MicroStrategy is, I believe it's around where Bitcoin used to draw down 50-60% normally in 2017, and we've seen MicroStrategy draw down 7-8 times now this cycle since he adopted Bitcoin, of 35% or greater. Again, mental health is not great, but it's quite astounding to see all these drawdowns, and but this brings in a lot of speculators, and he wants people to short the stock. He wants the options on the stock. He wants to get as much attention as possible. This just shows other companies that have adopted a Bitcoin treasury strategy. So Metaplanet, a Japanese company, was the best performing stock on the market in 2024. They were up 2,000%, doing a similar strategy. And Similar Scientific as well is slightly higher than what it was, another US-based company. My last slide, a couple of weeks ago, we had President Trump making a strategic reserve for Bitcoin and the United States digital asset stockpile. To be honest, I can't really believe that happened, seeing with the last US administration on how anti they were. The caveat to this Bitcoin reserve is that they need to buy Bitcoin in delta neutral ways. So they need to find ways in order to raise money that doesn't incur any losses to the taxpayer, and will find ways to accumulate Bitcoin for the reserve. And then the last chart is the stablecoin supply, where we're at a time now of geopolitical uncertainty, where global bond yields are rising. You need to find new entities to buy your debt, and Tether are one of the biggest buyers of US debt. I think they're the third biggest buyer of 3-month treasuries, and if they were a sovereign nation, they'd be like the 20th or 15th largest buyer. So this is how the crypto ecosystem now kind of comes into the US market. So this is another one of the narratives that's starting to form. Thank you.